I hope all of you are doing really good. And we are into a new session today, a new chapter that we are going to be beginning. So, in the last session, we closed the chapter called Financial Management. And today we're going to be starting with a brand new chapter called Financial Markets. Yes, it is a connection between financial management and there is a connection between markets. And it's very important. Only if you understand financial management, you will be able to understand the chapter called Financial Markets. Now, I have here piggy bank for you, where you have three little pigs, where you have money that you collect every single day. So I thought let the introduction also for the chapter be in the form of where you remember that you're going to be saving money or investing money. You may think it's silly, but still it's good for us to make sense when we are when we are introducing the chapter. So to understand what is the terminology called financial markets. Now, do you know what is a normal market? A normal market is a place where you go to purchase things or you go ahead and sell things. You want to either buy or you either want to sell. So let's say you have vegetables which are already over in your house. You would practically go to the market along with your parents, or probably your parents would go to the market and they would start purchasing vegetables. Now, what is a need for them to purchase? There is a need because they want to survive. So what are they doing? They're investing money into buying these goods, or let's say buying these vegetables in the market. So vice versa, if you are a seller, you want to invest your money into selling a lot of things. So what is a market? A market is a place where you buy and sell things. Now, coming down to the topic called what do you understand by financial markets? Financial markets is also a place where you have shortage of funds. That means the business is undergoing shortage of funds. They don't have money. So because they don't have money, they want to raise money. And how are they going to raise money, or how are they going to buy things, or how are they going to sell things because they can make money? It's through this financial market. I hope it makes sense. So coming down to the mind map of this particular chapter, it's very important chapter when it comes to your examination. So it's very important for you to understand the terminologies or the mind map of this particular chapter. So first thing, we would start with the introduction today, then we would go to the meaning of financial markets, then the concept, and then the functions of financial markets. That's why it's in bold, because these four topics we are going to cover today, and it's pretty small topic. Now, how is this financial market divided? That means to say that you know that the business wants money, they want to buy things, they want to sell things. How are they asking the public to invest money? Okay, so they are asking the public to invest money either through the short-term money market instruments or the long-term capital market instruments. Now, what is this short-term money market instruments? Below this, you have something called instruments. Again, I have the money market instruments, and below capital market, you have primary market and you have secondary market. So here we need to put an arrow mark because you need to know below money market, you have money market and its instruments, and below capital market you have primary market and secondary market. So this chapter is very simple if you understand what comes below the chapter. Otherwise it may look jumbled and complicated for you, and when it comes to scoring in your examination, this of weightage. So it's very important for you to understand what comes in this particular chapter. Now, when we talk about this money market instruments will come for a definite 4 marker, or it may be asked for an 8 marker. Usually it gets asked for 4 marks. Now, what is under your capital market? You have the meaning, and capital market is divided into many. That is primary market and secondary market is divided into two things, that is primary and secondary. But primary is divided into, that means when you are buying things. Now let's say I am the company, I am the one who's selling things to you, and you are the let's say you are the public, you are the ones who are buying things from the company, that is you're buying things from me. So If what are you buying here? We are not buying biscuits, or we are not buying gold, or we are not buying, let's say, we are not buying any vegetables here. But what we are buying is, I'm the company, I'm in need of money, I have shortage of funds, so I am selling you bonds, I'm selling you treasury bills, I'm selling you shares and debentures, and you being the public, you are buying all this from me because you are the investor and you have a lot of money and you want to save money. So what are you doing? You're investing your money with me, that is, I'm the company. So there's a capital market means, basically capital market means it is long term. Okay, capital market means long term and money market means short term. Okay, I'm just in rough, I'm explaining this, but when it comes into detail explanation in your topics, I would help you with that. So basically money market means short term, that is less than 90 days or less than a year. Then capital market is greater than a year. Whatever investment the investor is doing is going to be greater than a year. Then it's secondary market. Secondary market refers to your stock exchange, then how you're going to buy shares, how you're going to sell shares. All that procedure is what is this called as stock exchange, trading and settlement procedure of shares, your debentures and all those things. Then Security and Exchange Board of India. So all these topics as we cover in the later sessions, I would give you how much what is the weightage of its marks, so that it's easy for you to understand. So today we would be concentrating on the introduction, the meaning of financial markets, concept of financial markets and the function. And later the classification of financial market is divided into money market and capital market. Under money market you have money market instruments, which will come for a 4 marker or may come for an 8 marker. But when we speak about capital market is divided into primary market and secondary market. Primary market has its own division. Primary market has its own division, and secondary market is again further divided into all how do you buy shares, how do you sell shares in the secondary market. Now going down to the introduction. What are they saying? Every business, let it be a small business or a big business, it needs money for its day-to-day activities, that is working capital. It also needs money for a long-term purpose. So what are they saying? It needs money for payment of salary, rent. It also needs money for the purchase and purchase of machineries and to expand its business. All these things it requires money. So whatever money the business will have, definitely it will run into shortage of funds. They will need more money. That is where financial markets come in place. So what is the meaning of financial market? Financial market helps in the creation and exchange of financial assets. So what are you doing? The business is running short of finance here, running short of money here. So what is the business doing? They are selling shares and they are selling bonds, papers, which has a lot of money value to the public. So you are the investors here and I am the person who wants money. I am the company. So what am I doing? Instead of you investing your money into the bank and getting just 6% of interest, I will tell you invest your money in my organization, you will get 10% interest over a period of 1 year or 2 years. So where exactly will you go and invest your money? Whether it's going to be a bank or whether it's going to be a company, definitely you'll come to a company. Why? Because within a year you're making 9% interest, but in a bank you're only making 6% of interest. So that is what is a financial market. It is a market for creation and exchange. I'm creating, what am I creating here? I'm creating a value for your money and I'm also getting money from you in the form of selling my shares and debentures and bonds, etc. So the main purpose is to bring the borrower and lender together. Now who is borrower here? Borrower is the company, and who is lender here? Lender is you, that is the investor. Okay. What is the functions of the financial markets? The functions are very simple. Please ensure that you're learning the headings. You can self-explanate these headings by your own if you only just know one or two terminologies. So it's not very difficult. What is the first function of the financial markets? The first function is it's bringing two people together, that is the borrower and the investor. It's bringing together. So what is it doing? It is creating a saving into the minds of the investor, so that whatever money you are investing in the bank, in by getting 6% of interest, you are investing the same money into a company so that you can get 9% of interest. So what is happening here? It is mobilizing the savings and channelizing them into the most productive uses. So instead of just getting 6% interest, I'm putting it into better use. The company is going to put that money into better use so that you can increase your savings. So what is happening here? Your savings are getting increased into productive use. That means the company will use it for their own benefit, and they're going to give the investors more money than what a bank is promising. So that is your first point. The second one is facilitates price discovery. So what is it doing here? You know that any organization and any product or whatever you are selling, there is a topic called as demand and supply for the product. So what are they saying? You all know that the forces of demand and supply helps to establish the price for a commodity. Only if there is a demand for the product can there be a price for the product. So what are they saying? If there is a lot of weightage for the product, if everybody wants the product, only then the demand of the product will increase. Otherwise there will not be any demand of the product. And depending on the demand of the product, the prices of the product would also increase. So what are they saying? In the financial market, the households are the suppliers of funds and business firms represent the demand. So who is in want of money here? The company is in need of. So COM refers to company. So company is in need, or is the demand here. Why? Because they are the one who want money. Okay. What do the company need? They are the one who want money. So they are asking the public people to invest their money into the company. So what is happening when the demand, that means when the company needs more money, the investors are ready to give money to the company because they know that their savings or they are channelizing their money into the right source, and depending on that will be paid. The third one is providing liquidity to financial assets. Now, what is liquidity? Liquidity is nothing but your assets which can be converted into ready cash. So, anytime the public really needs money and they've invested the money into the company, they can go ahead and they can close the bond, or they can close the account and they can get back the money. So, what is happening here? It's a very easy procedure. It's easy procedure here. It's not a very complicated procedure. So what are they saying? Anytime the investor wants to buy and sell the assets, they can buy and sell the assets over a period of time. There is no hard and fast rule telling that if you are going to buy a bond over a period of 5 years, your bond is going to get freezed or your money is going to get freezed in the company is not going to give you the money. There is no hard and fast rule like that. Anytime you want the money, you can inform the organization, you can close the bond and you can get back your money. Probably the percentage of interest would fall a little, but still your money is going to be safe. So what are they saying? Whatever money you're investing into the financial assets, it can easily be converted into cash whenever it is required. So that is again a main advantage or main function of the financial assets or in the financial market. The fourth one is reducing the cost of transaction. How are you reducing the cost of transaction? If you're investing your money into a bank, okay, you're only getting a percentage of interest, let's say 6%, and if you're a senior citizen, you get 7.4% on your FD and on your savings account. But what is happening here? Every company is giving you different percentage of interest. Like let's say if you want to buy Infosys bonds, Infosys company bonds you want to buy, they will say our bonds are ranged, you will get a percentage of interest at 12%. But let's say if you want to buy Wipro company's bonds, Wipro would say you'll get a rate of interest as 13%. So what is happening here? reducing the cost of transaction, and you don't have to go to the company and buy from the company. Everything is done online, so it is saving a lot of time for you, and there is lot of effort and money that has been saved both for the buyer and the seller. Why? Because you don't know, you only know which company you're buying from, and all the legal formalities is done over the internet. So it is very easy for you also, it's easy even for the other person at the other end also. And you can compare from one company to the other, and you can decide in which particular organization you want to invest your. Then coming down to the classification of financial markets. Now there were only 4 points. They were in the chart. If you see, there are around 6 to 7 points when it comes to the functions of financial markets, but there are only 4 to 5 points which I've explained. That is more than enough because it will only be asked for a 4 marker. But coming down to the classification of financial markets, I already had informed you financial market is divided into two: money market and capital market. Now under money market, you'll only be learning the instruments of money markets. Okay, you'll be only learning the instruments of money market, and this is less than 1 year, which is very important for you to understand. And when it comes to capital market, it is greater than 1 year. That means whatever money you are investing in the organization is greater than 1 year. The maturity period is greater than 5 years or greater than 10 years. It all that refers to your capital market. But if you're investing in your money market instrument, whatever money you're investing is less than 1 year. So whatever benefit you're reaping or whatever interest you're gaining will be less than 1 year. Then again, this capital market is divided into primary market and your secondary market. Primary market is nothing but you are investing in your shares or your debentures or your bonds or whatever it is greater than 1 year. But when it comes to primary market, that means you are newly buying the new shares. Okay, there is nobody else who's bought those organization shares. First time you are the one who's in buying the organization shares. So that is the reason it's called as primary, first hand shares you are buying. But when we speak about secondary market, these are the shares and bonds and debentures which are being sold over and over again. Okay, there's no first person or second person. It's just everywhere and everyone is buying these shares, and then you become the person who's buying these shares. So this is where you have a stock market here when it comes to your secondary market. Okay, but when it comes for a primary market also, you trade it on stock market only, but there is a procedure for everything. So the only thing that you need to keep in mind is financial market is divided into two: money market and capital market. Money market has instruments like treasury bill, commercial paper, call rate. All these are money market instruments, which is very important and very interesting also. So as you start working, you want to invest money, you can find ways to learn how to invest your money into all these money market instruments or capital market instruments, and you can make quick money rather than keeping your money in the bank. You have to take a little risk though. Now coming down, financial markets are classified on the basis of maturity. That's what I told you, based less than 1 year or greater than 1 year. That is what they are saying. Then the instruments with a maturity of less than 1 year is called as money market instruments. The instruments which are greater than 1 year or the maturity period is a little longer is called as capital market. So it's very important for you to know what is the classification that is happening in the financial market, what comes under, so that it's easy for you to understand. Now coming down to your topic again, we have completed with all these 4 topics. It is easy topics. So in the next session, I would start with your classification, that is money market instruments, and I will do a bit of your this one primary, a comparison, that's distinction. We'll complete till here. So it's please ensure any doubts, any questions you have, please let me know, because this particular chapter has a lot of weightage. Around 20 marks to 19 marks comes from this particular chapter, and we would even be discussing what are the questions that usually comes from this chapter repeatedly that's been asked. So please stay tuned, and please any doubts, any confusions, anything that you are unclear of, you will take my help and you will let me know. I would be happy to assist. Thank you so much.